All right. Okay, good evening, everybody, and welcome back to Walks in Wall Street. It is a beautiful night in New York City, but it must have dropped at least like 15 to 20 degrees over the last, I don't even know, maybe 2 hours? Now, it is that time of year, right? We're already in mid-September. It is September 19th, 2023. It is a Tuesday night, and it's kind of getting cold. I actually had to put on a jacket. When I left my apartment, I was like, yeah, it's probably not the best idea to be walking around in a t-shirt. I believe it's only 65 degrees out. With the wind, it probably feels a little bit colder. But anyway, I guess we'll just have to deal with it. Yet again, it is Tuesday, and tomorrow is really going to be the major day on Wall Street, right? Tomorrow is the conclusion of the FOMC meeting, the Federal Open Market Committee meeting. And that means we're going to be hearing from the Fed chair himself tomorrow. Now, it'll probably be broadcast live on CNBC. They usually have like a YouTube link up where you could probably watch the speech live. And, consensus is that we're going to have a little bit of a pause, right? They're not going to raise rates. They're not going to cut rates. It's projected. Now, anything can happen, right? But it's projected that the Fed is going to hold tight, at least for now. As we look out in the Q4 of 2023, which is fast approaching, right? It's, once we hit October, that is Q4. It is projected that we are going to at least get one more rate hike before the end of the year. Now, let's just assume for a moment that at the next FOMC meeting, so let's assume we get a pause tomorrow, right? We'll talk a little bit more about it as the stream goes on. But, the Fed funds rate right now is in a range between 5.25% to 5.5%. And many economists' projections is that 5.5% is going to be the peak, right? So that's a major assumption. After last week specifically, as we heard from the Bureau of Labor Statistics, as we got the CPI report out, I think we're probably going to need at least one more hike, right? So CPI came in at 3.7%. The vast majority of that increase was due to increasing energy prices. We're going to talk about energy prices today as crude oil is yet again over $90 a barrel. There have been some reports coming out of California that a gallon of gas is over $6. So we'll talk about that. So, judging based upon the fact that we have now 3 months in a row of a sort of counter-trend move as it relates to inflation, we'll probably get at least one more 25 basis point rate hike before the end of the year. Now, if we get that, that's going to take the Fed funds rate from where it is currently at 5.25% to 5.5% to 5.5% to 5.75%. So could we potentially see a 6% Fed funds rate by the end of the year? I don't know. We'll have to, we'll sort of have to play that by ear. So be on the lookout for that tomorrow. We will do a deep dive, probably on tomorrow night's stream. Let's quickly shift gears a moment and go over to cnbc.com/bonds. What I'll go ahead and do, since I'm near my computer, go ahead and look in the chat for my name. It'll be a highlighted yellow box. It'll say Walks Wall Street. I just dropped the link to cnbc.com/bonds, and you could look at the entire yield curve there. Now, notice what happened today. The short end of the curve, right, which I classify as, 1 month all the way to about 6 months. The yields on the short end of the curve went up today, and the yields on the long end of the curve came down a little bit. So if you want to follow along, we'll take a look at the 1 month Treasury right now. It's yielding 5.412%. If we go all the way to the 6 month Treasury, it's 5.564% on the 6 month. And on the 1 year U.S. Treasury, which we always look at, pretty much every night we cover this, it's yielding 5.463%. Now, as we make our way down towards the longer end of the curve, if you look at that 30-year Treasury, yielding 4.426%. And if we look at the main spread, right, a lot of times if you watch Bloomberg, CNBC, they'll talk about the spread between the 10 and the 2s, right? That is the main spread that everybody watches. The 2-year Treasury is now back above 5%, right at 5.092, and the 10 is at 4.361%. So we have a pretty aggressive inversion, right, of the yield curve. And we'll sort of talk about what all of this means, right, and why it's important to keep an eye on the yield curve, particularly as the yield curve transitions, right, from a flat curve to a steep curve, and then maybe an inverted curve. It's very important to watch Treasury yields as it goes from an inversion to maybe flat again and then to steep. There's many reasons for that, and we'll talk about that tonight. I think I had one more thing for you guys. We'll briefly touch on commercial real estate again. Salesforce CEO and founder Mark Benioff, very well-respected CEO in the tech space, pretty much the pioneer in SaaS software. Now, for those of you who don't know, SaaS stands for Software as a Service, and Benioff pretty much pioneered the largest cloud-based software company in the world, Salesforce. Their main product is a CRM, which is a customer relationship management software. I'm sure many of you have used Salesforce or have heard of it. But Mark Benioff has been a big cheerleader of San Francisco. And as of late, he has come out and voiced his concerns and criticisms about his city, saying that there's increasing crime, there has been increasing theft, it's getting dirty, and that if this continues, if this trend continues of the decline in San Francisco, well, he's threatened to move his signature and iconic and classic Dreamforce conference out of the city. But some good news. I think this is a time to potentially be contrarian, right? I always say it's always appropriate to look to be contrarian, but to back it up with logic and reasoning. It's not appropriate just to be contrarian for the sake of being a contrarian. I think it's appropriate to take calculated risks and calculated bets. So the commercial real estate market in San Francisco is just starting to see a little bit of a breath of life, and we have been talking about this, almost for the past half a year. Usually when there's blood in the streets and everybody's counting a certain asset class or a city down, that is where you should really start to take a peek, because there could be some hidden alpha there, right? Usually when everybody is, all excited about something and, they're head over heels about an investment idea or a specific city, right? And they're very bullish on it. Usually the probability for you as a portfolio manager or a PM, right, or an LP to generate alpha, it diminishes significantly. But when you take a contrarian approach, right, a calculated bet, not just taking a contrarian bet for the sake of being contrarian, there could be significant upside, right, for those who are willing to stick their necks out and deploy capital. That's all I got. So we're looking at a gorgeous view of the Empire State Building. We are reporting live directly outside the brand new Moynihan Train Hall. And I wanted to come down to 34th Street tonight because we do have some updates on the new Penn 2 project, which is right here. So we're going to take a little bit of a walking tour around the brand new entrance to the Long Island Railroad. A lot of the scaffolding has been coming down, so you're going to be able to see a lot of the work that's been going on right outside Penn Station, facing east towards the Empire State Building. So let's do that. I'm going to go ahead and close up my laptop here. I'm going to say hello to everybody in the chat, and we will get started on the stream. So allow me a couple moments. And make sure to hit the like button. Okay, I'll clip on the microphone. And team, we are ready to rock. I want to welcome all of you to the gorgeous Midtown Manhattan. Could you get a better shot and a better view of the Empire State Building? I really don't think you can. I honestly do not think we can here, folks. Hey, I see Jafet Perez, Richard Vogel, Joe Ratz, Austin City Limits, Bren Hawthorne is here, British Gray from Tampa, Florida. Danielle, Carol S. Yo, what's up? Long time no see. Deborah is here. Carol Reevy, Gigi NYC. Pool Traders here. I can see a pool trader. Master Killa 95. Interesting name. Richard Vogel, Christina. Juan Fernandez from the 305 in Miami, Florida. Justin S. Andrew Nielsen. Good to see you, Andrew. Tim Thompson. What's up, Tim? Welcome. Steph UF, Joseph Hardaway, Tug Carter, Abdullah, Mohammed, Emmanuel, Jeff, Lisa, Bree Grams, B. Cruz. Wow, we got a full house early. And Colton Manning, sunshine after rain, everybody's here. Okay, so here's some clarity here. We're starting out at the brand new Moynihan Train Hall. It's a fantastic place. Before we venture directly into the new Penn 2 project and get a little bit of an update there, let's head a little bit towards the Hudson Yards, because we do have some major announcements coming out of some big consultants, right? So you think of the Big Four, you can think about KPMG, EY, Deloitte, and the like. Well, some New York City commercial real estate news for us. EY used to have their main headquarters right in Times Square. I believe we may have talked about this, but I just quickly want to cover it since we're headed towards the Hudson Yards. Breaking news in New York City, folks. EY has now left Times Square for a multitude of reasons, but I think we could just kind of put the pieces together as to why a major company would want to leave Times Square. particularly the way the city is going now. And they've officially moved to the Hudson Yards. And we have been covering this transition, this shift in commercial real estate for quite some time on Walks in Wall Street. And we've really nailed this to a wall. KPMG shifted their global headquarters from the east side of Manhattan to the Hudson Yards as well. BlackRock is now at the Hudson Yards. So it seems as if we're having a massive flight to quality as it relates to commercial office space. And a lot of the older buildings, particularly Class B and Class C office, is not really doing so well. You're going to have very high vacancy rates there, and the companies are downsizing, right? So even though they're moving to the Hudson Yard, you can sort of see some of the office towers here. While they're moving, they are also downgrading in terms of overall square footage that they're leasing. So it's sort of like a nice double whammy, right? Because it benefits the employees. You have a sort of fresh new breath of life to come to work in a place that's clean, a place that's brand new, tons of restaurants, coffee shops. I mean, there's so much to do, and there's so much that the Hudson Yards has to offer, all while probably saving the companies and the corporations significant money. So we'll stay on that trend. We'll just do a quick walk around. Maybe they'll have some, EY signs up here to signify that they've moved officially. But I just wanted to cover that before we head back towards Pen 2 project, where we're going to be talking about Vornado, which is Steve Roth's company. Yeah, you can see the NFL Essentials here. They finally just got some furniture inside of the lobbies here at the Hudson Yards. Looks pretty nice. Hey, Evan Weeks, what's up, my friend? Says Tom, EY tried to recruit me last year, did some digging, and found out they run a meat grinder for college, for recent college grads, and they wanted me or someone to come in and be the hatchet man and slave drive, says Evan Weeks. Well, I'll sort of bite my tongue on that. I'll just say I don't disagree with you. But look, management consulting is a very, very, I would say, lucrative opportunity for a lot of new college grads, right? I would say the most coveted jobs out of college, particularly in New York City. People from all over the country move to New York to get very lucrative jobs in investment banking, working for the main bulge bracket investment banks like Goldman Sachs, BNY Mellon, JP Morgan Chase, all the major banks. But also consulting is a very lucrative industry as well, but it's very demanding, lots of hours and the like. I think it's worth it if you're young. You're going to get a lot of good experience, and you're going to meet a lot of people and really build your network. You can actually already see the EY sign there. Hey, Design Ideas, what's up? Says good evening from Providence, Rhode Island. Welcome. We are exploring the Hudson Yards development today. A lot of the scaffolding is coming down, the space is opening up, there's a lot of nice landscaping, and I think we're just going to be just in time to maybe walk on the brand new Moynihan extension to the High Line, which I think will be cool. We haven't done that in a while. Hey, Zubin H, welcome. This is more, we'll head to the Palm Beach area. That's also been a pretty big trend as well. But here's what I've noticed as well, and put in the comments or in the chat below. The sections of these major banks, investment management companies, consultancies that are moving to South Florida, I've noticed that the majority of those positions, those jobs that are moving down there, tend to be more senior positions, at least just from what I'm seeing currently, which I guess would make sense, right? If you're a managing director, right, or a VP, and you've put in your 20 years of work at the bank or at the hedge fund or wherever, right, you can be rewarded with choosing to work in Palm Beach because that's probably where you're going to retire anyway. So it does make sense. I'll actually be down in Miami, Florida, starting October 1st, which I'm really, really excited about. We're going to check out all of the new developments. I know Citadel Securities, Ken Griffin's company, is going to build a massive tower down in Brickell, which I'm really excited about. Susanna Q4 is here. What's up? Jafet Perez says, Tom, you were uptown yesterday at 100th Street. I was. We pretty much walked the entire length of Central Park. Juan Fernandez says, Tom, how can I get a job as an analyst or a trader for a firm? No experience, only experience is in medicine with an MSN. Well, here's the thing. If you want to work, and this is from my experience, if you want to work at an investment bank, I don't know what's going on here. This is like a ring of fire. Kind of looks a little bit sketchy. I don't know what's going on. Chances are, if you want to get into investment banking, the rudimentary way to do it is you got to go to a top 50 school. Usually you do some sort of summer analyst internship program with one of the major banks. You'll probably do a rotational program like in sales and trading and M&A, maybe back office. And then, depending on how well you do at your internship, they'll invite you back and give you a full offer. Now, does that mean you have to go to a top 50 school and you have to take that route to get into investment banking? No, but the odds that you will get in if you don't take that route go down significantly. But that doesn't mean you can't do it, but that is like the way to do it, right? If you want to work at Goldman, if you want to work at JP Morgan, well, chances are they look for a top 50 school. You're going to do a summer analyst program at Goldman Sachs here in New York, or JP Morgan or Morgan Stanley, and if you perform well, based upon which bucket they put you in, well, they'll invite you back and they'll give you a full offer, right? That's usually how it works. Now, if you want to be a trader, right, and if you want to invest money and manage money, I would, and you don't have all that pedigree, I would just take the entrepreneurial route. Do the diligence yourself, save up the money yourself, and build a track record, right? If you can build a successful track record that's verifiable, right, which means you have a third-party audit your trades and your track record, you can then shop that around to accredited investors and raise money. That's what Bill Ackman did. Now, it's so interesting that you bring up that question, because I have a great podcast that I want to recommend everybody listen to. Now, if you're following me on Twitter, what kind of dog is that, by the way? That dog is adorable. It's like a little black and white. I don't know what kind of breed that is. Anyway, what was I saying? This is the Moynihan extension, the Highline extension. Looks a little wonky, looks kind of a little crazy, right? But this will take you all the way down and around to the main Highline. But this drops you off right at the Whole Foods here, which is fantastic. The podcast. Okay, so if you're following me on Twitter at Walks Wall Street, the last thing I tweeted was a podcast where they interviewed Bill Ackman. Now, Bill Ackman is the CEO and founder of Pershing Square, one of the most successful hedge funds in the entire city. And if you want to know how to take the entrepreneurial approach to starting a hedge fund or managing money, you have got to listen to the entirety of that interview. You've got to do it. So if you type !Bill, !Bill in the chat, I've programmed the Nightbot to drop the link to the Bill Ackman interview. And that's what he did, right? Bill Ackman, even though he did go to Harvard Business School, a lot of people don't understand, at the time when Bill Ackman went to HBS, there was no investing classes, right? Business school really teaches you how to manage, and run a company and be a future CEO of a company. It really doesn't teach you, traditional investing classes, how to be the next Warren Buffett. So, Bill Ackman, he took the $40,000 he had saved up and he built his own investing track record, right? And through that track record over the years, right, from when he was 26 years old to about 30, he was able to have verifiable returns and results and then go shop his fund around to investors. And it's essentially a sales job, right? If anybody has any experience, raising money for a hedge fund, you're making tons of calls. You're probably, cold calling, knocking on doors, in theory, right, asking people for money. And you're probably going to ask hundreds of people. You're probably going to ask thousands of people for money, and maybe 10 people will give you money. Maybe you'll get 10 checks for 500 grand, or maybe 10 checks for $1 million, and now you're in business, right? And now you can run the, rudimentary hedge fund that you wish, right? Probably on a regular 2 and 20 fee structure. Look at this. This is super cool. This is reserve paddle. I feel like every other day there's some sort of new game that's being creative. You got pickleball, paddleball, wall ball. I don't think this is the same as pickleball though. Let's check it out. It looks fun, it looks nice. Hey, Jafet Perez, this is Tom. I was looking up Jesse Livermore documentaries last night. Yeah, check him out. We did stop by the Sherry Netherland last night, which was fantastic. Hey, Emma G says, hey everybody, it's been a while since I've caught a live stream. Well, we're very happy to have you back here, Emma. And welcome to the Hudson Yards, the beautiful Hudson Yards. Sunshine After Rain says racquetball. Yeah, David Main is here. What's up? Let me catch up on some of the chats. But yeah, check out that podcast, guys. Bill Ackman, he's the CEO and founder of Pershing Square. They're based right here in New York. Great investor, controversial guy. I like Bill Ackman. A lot of people, view him as a controversial guy. But I will say this. If you want a good laugh, because the investment business is, a serious business, but I also like to laugh and have a good time. You gotta go on YouTube, like pull up a separate tab and watch those old CNBC battles between Bill Ackman and Carl Icahn. Those always have me rolling on the floor laughing. Now, this was way back in the day. If you remember the company called Herbalife, does anybody remember that company? I don't even know if it's still around. It may. The only reason why I'm familiar with Herbalife was because when I was a kid, I was a massive, massive soccer fan. Like, I was obsessed with soccer. And this is the brand new Whole Foods here. It's awesome. And I remember, like, the highlight of my life at the time was when David Beckham, I'm sure everybody knows who David Beckham is. You don't even have to know anything about soccer. Just David Beckham is just famous in general. But David Beckham came to play soccer in the United States in 2008, which at the time was like unheard of, right? Because nobody comes to the United States to play soccer. You go to Europe, but David Beckham took a really big chance, and I think David Beckham is going to go down in history as one of the best businessmen in history, mainly because of his deal. So in his MLS contract, he had the option of purchasing a team. And when he retired from MLS, he purchased Inter Miami, and now you have Leo Messi. But anyway, not to get too far distracted from the story, the point of the story is this. When David Beckham came to play for the LA Galaxy, I believe the main sponsor was Herbalife. That's really the only reason why I know of the company. Now, Bill Ackman at the time alleged, right, gotta say alleged that Herbalife was running one of those, what do you call it? Like those pyramid type schemes or scams, right? Where the people at the top make all the money, and then you have all the, like the runt workers at the bottom. And I think they were selling fitness and nutrition products. But what was unethical, allegedly, what was unethical about the company in his short thesis, and the short thesis is still out, you can actually read it. I would advise you to read it. It's good practice for sort of understanding why investors come up with a particular thesis. Now, the claim, right, or the accusation was that Herbalife was marketing to mainly minority groups in lower income communities of lower socioeconomic status. And they were sort of like doing a predatory business practice on those communities. And they were promising, you're going to become like a multimillionaire if you sell Herbalife products under me. And anyway, the Bill Ackman was alleging that the company was running some sort of MLM scheme, right? The multi-level marketing schemes. And at the time, Carl Icahn, who's a billionaire investor from New York, had a really, really big long position in the stock, huge. And obviously, when you have allegations of that caliber coming out against a company that you probably own multi-millions of dollars worth of stock, well, you're going to get pretty pissed off. So Bill Ackman and Carl Icahn would go back and forth on CNBC multiple times, battling it out over that company, Herbalife. And, I'll let you all do a little bit of research on your own, but those battles back and forth were pretty hilarious back in the day, especially to watch live on CNBC. Hey, Meldis here. What's up? Hawaii, good to see you. Dusty Cole, welcome. Mark says, wasn't Bill Ackman trying to short Herbalife at the time? Yeah, I think they actually had a major short position on the company. Theos' Herbalife is still around. I wonder if it's still publicly traded. It probably is. I don't know. I don't really follow the company, but those were the allegations. Ethan R is here. What's up? Good to see you. Yeah, so that was a little bit of a walk around the Hudson Yards. What do you guys think? You'll notice that the Hudson Yards development is very clean, right? It's almost like you're walking around in Brickell in Miami. You never see one thing of dirt, one thing of trash on the ground. There's security everywhere. And I believe that's probably why a lot of companies are attracted to moving their locations to the Hudson Yards. One of the main reasons why we came here tonight was because EY left Times Square to join KPMG at the Hudson Yards. I think they did a really good job on the development. So we're going to head back into the main portion of the city, if you will. We might as well cross here since we have the light. Oh, Tariq Khan, is that right? HLF, it is still traded. Good to see you, Tariq. Welcome. But anyway, if you guys are just joining, I was recommending that podcast. If you want to listen to it, which I think should be required listening, that'll be the homework assignment. Just type !Bill, B-I-L-L, in the chat. It was a really, really good podcast, all about perseverance and all about reframing. And it was kind of weird listening to it because I'm like, I say that all the time. I'm like, you kind of have to reframe things. So if anything negative happens in your life, or you're going through a tough time, or you're going through a ton of adversity, you should try to reframe, right? Do a reframe. If you're in sales, you have trainings on this. You should reframe that experience to say, oh, this is good for me. And by me going through this, I'm either going to learn a new skill, maybe I'll learn from the mistake and I could, get one up on my competition, so I don't have to make that mistake again, right? You never want to make the same mistake twice. And something positive generally will come out of it. And I think that's true. I mean, when I look back on my life, any time where I've ran into a major adversity where I'm like, oh my God, this is going to be like soul crushing for me, this is going to end my career. It was bad for like a month, but then looking back on it, like, oh my God, I'm so glad that happened, because then I left to do this, or I left to start this job, or start this company, or do this. And then just like you take off like a rocket ship. So check out the interview. I think you'll like it. Hey, Gary Carpenter, what's up? Sal is here. Yeah, when the going get tough, the tough get going, for sure. That's another good one. So we are now approaching the backside of Madison Square Garden. where you're going to see a few changes to the pen development here. Hey, Andrew, thank you so much for your very kind 10 CAD donation. Since inflation is caused mainly by crude oil, if oil keeps going up, will Powell still increase rates in Q4 of next year? It's a really good question. That's probably going to be the bulk of our conversation tonight. But first, thank you so much for that very generous and very kind donation. But I think you're spot on, right? What Andrew said, he's like the bulk of inflation, I would say, I wouldn't say being caused by, but if you look at the last CPI report, which came out last week in the United States, inflation went up. So the headline reading came in right at 3.7%. And what Andrew said is totally correct. The vast majority of that increase we can attribute to higher energy prices. Now, we've been watching this for a while. If you go on like TradingView or just go on, just look at any tickers. If you want to look at the ticker symbol for crude oil, you can look at ticker symbol CL. CL. We're back above $90 a barrel, yet again. And that means the trickle-down effect is that Americans are going to be paying more at the pump. There's already been some reports that there's $6 a gallon gas in California. So I think I don't want to put words in your mouth, but I think what you meant to say is not that inflation is caused by crude oil, is that the last CPI report, the vast majority of the increase was attributed to the huge uptick in energy prices, which you're right. So here's what the futures markets are saying, right? Or I should say, this is what the bond market is pricing in. It's pricing in at least one more rate hike by the end of the year, right? So by the end of Q4, which is, we're almost in Q4. It's the end of September, which is crazy. I think so. I think we're going to get one more rate hike before the end of the year. Tomorrow is the FOMC meeting, or the conclusion thereof. We're going to hear from Fed Chair Jerome Powell. I don't think they're going to raise rates tomorrow. What I think they're going to do is pause, and he's probably going to throw out some very hawkish comments. I think at the next FOMC meeting, right, to round out the year, we'll probably get the basic 25 basis point rate hike, which would then take the Fed funds rate from where it is now at 5.25% to 5.5% to 5.5% to 5.75%. That's sort of my prediction, and I think that's needed. I think that would be appropriate, and I think that would be needed. Tomorrow, remember everybody, or excuse me, not tomorrow, I apologize. Thursday, I'm getting my dates mixed up. Sorry about that. Thursday, we are going to hear from the Swiss National Bank as they set the tone for their monetary policy. And on Friday, we are going to hear from our good friends over in Japan, the BOJ, as they set the next tone for their monetary policy. Now, the crazy thing about Japan is they still have negative interest rates, and they're pretty much still easing, while the rest of the world is tightening pretty aggressively, let's just say that. I don't know, but what do you guys think? What do you guys think is going to be the result for tomorrow? Hey, LB, thank you so much for your very generous $10 donation. That's very kind of you. I appreciate your support of the channel. Now, I do have to point out something here. Robert, yes. So Robert says, are they redoing Penn Station? Yes, they are. We're going to do a little bit of walking tour and explain the updates on the construction project. But first, I just got to give a quick update on this sort of little area we have here. I guess they made this sort of bus stop, this flex bus, and I don't think this is good for the neighborhood at all. You can kind of see it just like droves of people constantly, nonstop. And after 11 o'clock, my old apartment used to be right here. I actually had to dump the thing and get out of my lease because I couldn't live there anymore. Lots of drugs, lots of heroin, like open drug trade, blatantly. And in my opinion, right, in my view, open human trafficking here. Especially after midnight. It's bad. Right on this corner, 30th Street and 8th Avenue. And it never used to be like that. It never used to be like that. So hopefully the city will clean that up. because there's always open needles right around the corner here, particularly right here. But you'll see the most of that like after dark. So this is not, it's like a little bit of a hot spot, which is weird because it never used to be like that. Right here at Penn Station, right outside of Madison Square Garden, no way. Anyway, hey, Daniel G is here from Buenos Aires, Argentina. Let's get away from that, whatever that was. Hey, Daniel G, thanks for joining us. We are going to have some updates here, and the reason why I wanted to give these updates is because the location in and around Penn Station, particularly 34th Street, the Amtrak entrance, the Long Island Railroad entrance, this is what the majority of people see when they first come to New York City. And we as a city, at least me, I won't speak for anybody else, I'll speak for myself, we want to make sure we give off a good impression as a city, right? If somebody's traveling from overseas, from China or Korea, from Dubai or wherever, right? Just naming random places. We want them to be like wowed. We want them to be impressed. And if they come off, the Amtrak, if they come off the Long Island Railroad, and the first thing they see is just like open drug trade, tons of homeless, and needles all over the place, that's not a good first impression. So I'm very optimistic to say, as we take a quick peek at Billy Joel, says Madison Square Garden is the center of the universe as far as I'm concerned. I agree. The good news is this. Penn Station is getting a complete and total rip and replace and a revamp, which I think is long overdue, and I think is going to totally change the perception of 34th Street Penn Station. So long overdue, right? But I am optimistic about it. And as we round the corner here, so we're going to go through the scaffolding and we're going to bang a left. One of the things you'll notice is a lot of the scaffolding that is over the new entrance to the New Jersey Transit, Long Island Railroad, a lot of that is coming down, and you're going to be able to see the brand new facade, and I think it looks great. I think they did a really, really good job. Here's the if, or here's the but. Here's the but, okay? Here's the thing. Will the city be able to keep it clean? It seems like they're able to keep the Hudson Yards clean, right? I just gave you a full walking tour of the Hudson Yards. That place was spotless. The question is, once all of this construction is complete and the scaffolding comes down, how long, how long will it stay in the pristine condition? That is the question. Hey, sunshine after rain, what's up? This is Tom. Sad to say it was worse in the 80s. In this area on 8th Avenue has always been really grimy. Now it's just, mostly visible, you said. It's most visible now. Got it. Yeah, Theos' Hudson Yards is private. No, yeah, that's true, but, police presence could be, I'm more talking about like the presence of, like drugs and stuff. But you're right. Hey, Ali Star, welcome. Okay. But if you're all enjoying the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. We usually do these live streams about 7 days a week, starting at 8:30. So you'll start to see this is all of the new development here. This is the Penn 2 project. You can see they have this electronic screen turned on, but we're going to cross the street. You can see this says Vornado Realty Trust. Obviously, Steve Roth company. It's the same company that did 220 Central Park South on New York City's Billionaires Row. Now, standing from afar, I think it looks great. Some of the scaffolding is starting to come down. Everything looks really brand new. You could see some pedestrians actually walking underneath. As we make our way towards 34th Street, we'll sort of U-turn it around and we will do a complete walking tour under this sort of digital signage here. But I think it looks pretty good. Hey, Solo Flyer says, I'll be back in New York City tomorrow. Loving South Florida the last 2 weeks. Solo Flyer. It's so funny. You're going to be coming back to New York, and I'm going to be going to South Florida. Oh, it is UN week, so you have all of the security decals. Tons and tons of politicians are here. We have the President of the United States, President Joe Biden is here. Everybody's here in the city. Bob Smith says, aggressive homeless and garbage bags lining the streets. Yeah, I mean, yeah, let's just say that. I've noticed that too. You'll see in a walking video I'm going to upload here in a couple days. I had a really bad encounter. I may just edit it out of the video, but I had a really, really aggressive encounter with a homeless guy. I think I may edit it out of the video because I think it's going to draw troublemakers, but I'm debating. Hey, Arsenal Fan 13, thank you so much for your generous $10 donation. Just glad the area around Penn Station is getting revamped. On my visits to New York City, I've always found the area to be interesting. Hopefully they could take a page out of the Great Hudson Yards. I totally agree with you, and I really appreciate you supporting the live stream. Look, it's of my view that, you know, if you're a tourist, chances are if you're visiting New York City on a budget, you're going to fly into JFK, you're going to take the air train to Jamaica Station, you're going to take the Long Island Railroad to Penn Station, and then you're going to come out and see all of this. So this is definitely a nice change to the city. I think it looks clean, it looks modern, it looks new, and it's a good show of force to say, look, New York City is the greatest city in the world for a reason, right? I'm not sure if anybody's ever been to like Abu Dhabi or flown into any of the airports in the Middle East. It makes the United States look like a third world country, right? Not to be negative, but let's just be honest. Now, I know it's because those are newer countries and they're pretty much building from scratch, and the US has old infrastructure, but I mean, man, we got to be competitive, and I think a city like New York deserves the best in class transportation hubs, and the good news is it's coming. We are getting it. We just have to wait a little bit longer. Now, the site across the street used to be the old Pennsylvania Hotel. They've totally torn it down, total demolition, and this makes way for an amazing view of the Empire State Building. Absolutely fantastic. And you can also see the One Vanderbilt building all the way in the distance. And it's kind of weird seeing this. All of the New Yorkers sort of know what I'm talking about. Because you couldn't see any of these buildings before, but now that we have this huge demolition of this old hotel, it actually looks really nice. All right, let's head in here. But once again, Arsenal fan, thank you for your generous donation. I really do appreciate that. Limitless NYC says, Tom, what shoes do you wear? I'm curious. I wear Adidas, like these Adidas running shoes. I actually just bought them because I was streaming in my Cole Haan shoes, and those weren't the most ideal for live streaming, I would say. Not the most ideal. All right, everybody, look at how great this is. I mean, does that not look fantastic? I give this a 10 out of 10. You'll notice a lot of the scaffolding is completely down now. Let's try to zoom out. Look at that. I think the wide angle looks okay. So this is the brand new entrance towards Penn Station. You have all the scaffolding down over to the right. They're pouring the concrete for the new walkway / patio here in a bit. But if we stand all the way over by the fence, this is the main sort of area where the scaffolding comes down and it looks a lot different. For those of us who are familiar with Penn Station, we've taken the Long Island Railroad our entire lives. This is a complete and utter total transformation, and it just looks day and night. It's fantastic. So I'm optimistic about it, and this is exactly what we need. All right. And as you come out of the ground, you have that beautiful view of the Empire State Building. It looks great. Since we're here and we do have a lot of new people, let's quickly take a peek down in the terminal. And you'll notice the ceiling heights are all raised. Back in the day, the ceiling heights used to be so low, it was dingy, it was grimy, it was really bad. Now it's like a total 180 and it looks absolutely fantastic. So 2 thumbs up, and I give the developers a lot of credit for totally transforming Penn Station. Now as we're coming down the escalator, I want you to pay very, very close attention to the ceiling heights. If you look all the way over to your left, those are the old ceiling heights. I was literally almost scraping my head, but now, I mean, that is a total difference. It's amazing what they did. We may start to buffer, so I'll just quickly do one quick show around. Yeah, it kind of looks like an airport. I think it looks really nice. Now, if you can imagine this used to be the ceiling heights right here. Imagine the entire station that low. I know, Theo's like, it used to be the House of Horrors, never knew what was around the corner. So happy for the upgrade. It used to be like a freaking Rocky Horror Show movie in here. Now again, this is by Vornado, so Steve Roth's company.
Please watch your step and face forward at all times. Please hold on to the handrail while riding the escalator. Do not sit on the steps or the handrails. Baby strollers, push carts, and floor carts or cellular carts are not permitted on the escalator.
I know the view going up is really cool too, because you have an unobstructed view of the Empire State Building. So as you come off, that is your view. That is a much better improvement than before. I think that's going to give a really good impression in New York City.
What do you think? Go back.
All right, so what do you guys think? If we had to, if so far, right, and there's a lot more construction that needs to be done, but if we had to give it a preliminary rating out of 10, what would we give it? I think so far, just because 30th Street is still a little bit cringe, I'm going to give it an 8.1, but it's a rising 8.1. It's not just an 8.1, like, it's an 8. No, it's an 8.1, but the trajectory and the momentum is going up. Because 30th Street's still a little bit of a hot spot. Wendy England's is 8.5, Bob Poland's is 7, Ollie Star's is 8.5. Richard Vogel, 10 out of 10. All right, I mean, look, we're all age pretty much. Arthur says Vegas, they have potential to do something like this, but no subway. Interesting. Yeah, look, just as long as the city's moving in the right direction with this stuff, it's really all that matters, right? TC says it will be a 10 when everything gets clean. Oh, for sure. For sure. that's sort of why I've remained optimistic and remained bullish on New York all throughout the pandemic, right? Even when people's like, oh, New York City's never going to come back. It's just not a reality. I think if you're very familiar with New York City, it's just not even possible for New York not to come back. There's just too much the city has to offer. And the only missing piece that we have here, folks, the only missing piece is just if we get somebody or a mayor or even a governor of the state that's a little bit tougher on crime, this city is going to be an absolute rocket ship boom, and it's going to take people's faces off and just totally blow them off. It's just, I'm that excited about it. Hey, A-Name, thank you so much. Just, hey, Tom, I'm late. Where are we at tonight? Hope you're well. Thank you so much for your kind $10 donation. I appreciate it. A-Name, we are on the corner of 7th Avenue and 34th Street. This is Pennsylvania Station. You can get the 123 Amtrak, ACE, and Long Island Railroad trains. We were just doing a little bit of a walking tour of the new Penn 2 project because we've been covering commercial real estate a lot on Walks in Wall Street. We also talked about EY vacating their office in Times Square, now moving to the Hudson Yards. And we've been covering this, almost to the point of ad nauseum, right? You have a huge shift in commercial real estate, particularly office in Manhattan, away from older buildings, Class B, to Class A. Now, when these companies are making that transition to Class A office, they're downgrading square footage, but their employees get a nicer place to work. I would feel totally comfortable and happy working at the Hudson Yards every day. I think it's a great place. A little bit of road rage. That's kind of par for the course. So we'll cross northbound by Macy's at Herald Square. Now, here is sort of an issue that Vornado kind of ran into, and that's why they're pausing a little bit of the project. Some of the project they're putting on hold is because construction loans now are significantly more expensive than they once were, right? We talked about, a 30-year fixed rate mortgage on the residential side. The average 30-year fixed is right around 7.5%. Think about how much money costs on a construction loan. Many developers and builders are probably paying 10% money. Double-digit money now. So, it's tough to go into a market like the New York City market in this environment. And if you want to do a rip and replace or a rehabilitation project for one of these older office buildings, while vacancy rates are at all-time highs in the city, that's a big risk, right? Because money is very expensive now. So I think, and this is just sort of where I'm placing my bets, you're going to go through a little bit of a washout and volatility here over the next probably 12 to 15 months in Manhattan, New York City, commercial office retail. There's going to be some significant markdowns. I think there'll be some foreclosures, and that will make way for the new cycle. And I couldn't be more bullish about it. But there's going to be a little bit of pain. However, you'll read a lot of these articles in the Financial Times, Wall Street Journal, calling for doom and gloom. I actually think it's going to be totally the opposite. And I'll sort of explain why. Because at these valuations where these buildings are trading, right, it's technically it's not worth that amount unless it trades, right? It's kind of obvious, but many people will always post online, oh my gosh, I can't believe this house is on the market for $800,000. Well, it's not necessarily worth $800,000 unless it trades. Anyway, what I think is going to happen is at these elevated valuations for these office buildings, once the debt refinances, you're going to have significantly higher payments. The owners are not going to be able to make these higher payments because rent rolls are at pretty much all-time lows for some of these buildings, right, the older buildings. So they'll probably go into foreclosure, and investors, right, probably private equity and the like will be able to scoop up these buildings at a significant discount. But that's good, right? Because then the numbers will work for the renovation. If you have investors that are willing to stick their necks out in times of turmoil in the market, well, then chances are the numbers will probably work, right? If you can buy a building for maybe, 25 to 30% off, you put, 25, depending on the size of the deal or the building, you put $25 million to $30 million worth of work into it, you make it beautiful, you make it gorgeous, you expand the ceiling heights, you maybe add some condo units to the building, right, to make it even more lucrative if you can. I mean, workers in New York City are going to get a lot of new product, right? A lot of redeveloped, more modern, totally modernized product over the next 7 to 10 years. And that's a good thing. It's actually what we need. The last prediction I'll make is that the city, everybody knows in New York, there's a pretty big crisis for housing, right? There's not a lot of inventory. So as the city, they're going to have to do something to sweeten the deal for a lot of these developers to do these conversions, because condo conversions are very, very expensive, and oftentimes they can't even be done. But I think the city's probably going to come together and work with some of these developers. I think there's going to be, really good collaboration there. And I think you're going to see a lot of products come on the market in New York City over the next 5 to 7 years. And you never know. When we're walking around the city in 7 years, please God, if we're still doing this, we'll be watching on the Apple Vision Pro in 3D. We'll probably be talking about, the problem opposite to all-time record high rents. You never know. This could be sort of like a curse now, because we're going to go through some volatile times in New York City. But on the back end of this, we could get some, much needed inventory on the market, new, safe, nice units for people to live in, brand new office space. You could see a very different city here, guys, in 5 to 7 years. Now, am I being too optimistic? Am I being too crazy? Or should I be like pretty much everybody else that says, oh my gosh, New York City is gonna, be the next Detroit because it's a Democrat-run city and this and that. I don't know. I think I'm gonna take the opposite side of that trade. All right, Jafet Perez, welcome. Jafet Perez's stocks go up. There's actually, if you do a study, you can do it yourself. Most stocks actually go down over time. Most stocks actually trend towards zero over time. The reason why there's that little bit of a myth or a fallacy that, stocks go up over time, it's because they're mistaking individual stocks for the benchmark S&P 500. And the S&P 500 is constantly rebalanced, so if a company is not churning out earnings, if the company is not doing well, it gets kicked out of the S&P and it gets replaced with the company who's actually producing earnings and is doing well. But the majority of individual stocks, the trajectory is actually the majority of companies fail and actually go to zero. Colton Manning, what's up? Good to see you. Roberts is all cities have their ups and downs. I agree with that. Theo says New York continues to evolve and work through all challenges. Agree on the need for tough on crime will absolutely catapult to the next level. Love your optimism. Yeah, I mean, there's definitely, like Theo said, look, there's big problems here, big problems in the city. But it only takes one person to change it, right? To come in, if you clean it up, if you get tough on crime, I mean, that's gonna, imagine the wave of people who are gonna come back to the city. It's a good point. Hey, Joel PM is joining us. Says New York City can't be the next Detroit. San Francisco already claimed that title. Yeah, that's funny. Did anybody see that Mark Benioff tweet that came out? I think, now this is one of the downsides in New York. They got to figure out what to do with the trash. This is way too much. We have to figure out a different system. But Benioff, which he is a huge San Francisco guy, right? I mean, his family's been in San Francisco for generations. He has been very vocal about pressing the politicians in San Francisco to try to turn the city around, get tougher on crime, clean up the homelessness, do something about it. But Benioff is actually calling now for a little bit of a contrarian bet, which we've been talking about on the stream a lot, this contrarian bet on San Francisco, where I think you can actually potentially probably generate a lot more alpha investing in those particular markets because of all the distressed properties. These are really two good Korean restaurants. This one is called Hanbat. This is one of my favorites, but my favorite one is on 31st Street. Take 31. Fantastic place. But anyway, Mark Benioff tweeted today that the net new signed leases for commercial office space in San Francisco is actually going up. So a lot of tech startups, just companies in general, are taking advantage of this volatility in the marketplace to get really prime locations for office space. And I think that's actually going to be a good bet. Many people would disagree and say, oh, that's crazy. I think that's a very, very good bet. I think it's a very good bet. Let's check out some of the menu items. I haven't been here in a lot. It's actually getting me really hungry. This one, I always get this one. Kimchi sige, which is like a spicy kimchi stew. It's good. You have your bulgogi, spicy squid. This place has a good lunch special. Again, it's called Hanbat. Very good place. Hey, Dan Zhang is here. What's up, Dan? Dan says, Tom, have you heard that Elon Musk saying, hold on, the chat's going too fast. Dan Zhang says, Tom, have you heard Elon Musk saying that he might going to charge money for X just to get rid of all the bots? That he might make users pay for X? I did not hear about that. I'm curious now. What was his suggested pricing on that? Dan, are you talking about individual users on the platform paying? Like, if you want to use it, you have to pay like what, $3 a month or something? I don't know how that's going to go over. I don't know about that. Stephanie says $7.99. Oh, I don't know about that. I mean, I don't want to be one to doubt Elon Musk, but $7.99 for Twitter, I don't think anybody's going to do that. I hope not. I really hope he's not thinking about doing that. I didn't hear that at all. Hey, M3TV, what's up? Good to see you. Thanks for joining us tonight. This is a really cool Irish pub. Look at that. The tables on the outside are like, what are these, casks? Are they called? Barrels, casks? Hey, Desi, what's up? I don't think stakeholders or shareholders will allow Elon Musk to make that decision, to be honest. I heard that Instacart went IPO. I heard that. There's been, the IPO market's been opening back up a little bit. I guess we'll talk about that because it does tie into the sort of the general conversation of the stream. Now, think about the sort of timeline of the topics we've been covering. Once the Federal Reserve started raising interest rates, sort of going from quantitative easing to quantitative tightening, the first thing that happened is the IPO market pretty much shut off, right? And that's why we covered the potential bear thesis on a lot of investment banks, right? This was about a year ago. Because one of the main ways an investment bank makes money is off of fee income, right? So investment banks such as Goldman Sachs, like a pure play investment bank that doesn't have much retail exposure. You can think of Bank of America, JP Morgan Chase. Those are big major investment banks, but they also have retail exposure. Right, you could walk down pretty much any street. There's a Chase Bank right there. You could pretty much walk down any street in America and you'll see a Chase Bank or a Bank of America. It's not the same thing for a Morgan Stanley or a Goldman Sachs. There's no like retail Goldman Sachs storefront. So, you know, there was a record year for investment banks in 2021. I'm sure if you remember correctly, it seemed like every single day on CNBC and Bloomberg, it was new issue coming to market, new IPO, new SPAC, all of this nonsense. And when money is very easy, you know, companies come public and you have all of these, you know, SPACs, which I think we called that to a T. The SPAC mania was a total fraud. Now, again, you have to say allegedly, but I think the majority of SPACs that went public were so fraudulent. It was like, it actually makes me a little bit nauseous thinking about it. And tons of billionaires profited off that, like Chamath, and they knew they were selling shit. They knew they were selling the dog shit, but they did it anyway. And most of the SPACs that went public are out of business now. The special purpose acquisition companies. But anyway, so once the Fed started to tighten monetary policy, the IPO market pretty much shut off for a year. There were really no new issues coming public. But one of my really, really good, sort of like a mentor of mine, he's a very successful hedge fund manager. He said, don't pay attention to the IPO market when there's a new IPO coming on the market every day. Because when money is easy, it's also very easy to raise money from investors. But the companies that come public during raging bear markets, when it's almost impossible to get investors to fork up money, you've got to pay very, very close attention to those particular companies. Because if a company is able to raise money and go public and get investors to pony up cash when it's a very significant bear market, well, that must be like the cream of the crop company with fantastic financial earnings, with great revenue growth, with great governance. So just use that as a little bit of a tip. When IPO markets are totally shut off and almost nothing is going public, pay very close attention to the companies that are lucky enough to go public during that time, because chances are the fundamentals are fantastic, the governance of the company is unbelievable, and the management is probably shooting lights out. So, you know, sort of going back to what that chatter in the chat said about Instacart, the IPO market's starting to kind of open up a little bit. You know, we had ARM IPO last week, I believe it was, Instacart this week. Now, ARM is a major British semiconductor company. It was actually backed very heavily by Masayoshi Son. Now, Masayoshi Son is a very famous Japanese investor. I'm sure you've heard of SoftBank. I'm sure everybody here is familiar with SoftBank. That was one of the largest positions in Masa Son's Vision Fund. I believe they owned a ton of ARM. They owned a ton of Sprint at the time before the merger and acquisition with T-Mobile, and a bunch of other stuff too. Hey, Desi, thank you so much for your $5 donation. I appreciate it very, very much. Thank you for supporting the stream as we are headed down towards Koreatown. Appreciate it very much. Hopefully you're having a good day. Bob Smith says that makes sense about the IPOs. Yeah, I mean, look, think about like human psychology. Think about the feelings that you had personally during 2021, where every day you turned on CNBC, they were talking about the meme stocks and the nonsense and Cathie Wood and all of these high beta nonsensical stocks that were trading at ridiculous valuations. And everybody was an expert on the market, right? Everybody you talk to, your friends who, you know, don't even know how to count, they're like obsessed and they're recommending stock picks. That is euphoria. And during times of euphoria, that's when you should really, really be getting cautious. But when nobody's really paying attention to the market and when there's a huge washout, that is when you should really look to not invest. I'm not going to say look to invest, but start to do your due diligence and look for mispricings in the market, right? Investing, to sort of rip off Bill Ackman's quote here, is kind of really simple, but very seldom are people really any good at it. You want to buy companies who are producing and churning out earnings, churning out tons of positive free cash flow, and that have very wide and big moats around them, to sort of use Warren Buffett's terminology there. And if you want to, again, just for those of you who are just joining, if you want to listen to a great podcast that is sort of touching on some of the things we're talking about tonight, thanks. If you type !Bill, !Bill in the chat, the Nightbot is going to drop a link to an amazing podcast. I forget what the podcast is called, but they interviewed Bill Ackman, and it was an amazing, amazing podcast. And I think everybody should take, the 30 to 40 minutes out of their day to really listen to the podcast and sort of absorb all that information, because it's really valuable and really fantastic. And Bill Ackman talks about Seth Klarman in the podcast, and we always refer to the very famous value investor Seth Klarman, who famously wrote the book Margin of Safety, which you can check out at the New York Public Library, the reading room. This is an amazing shot of the Empire State Building here. Let me catch up on some of the chats. Stephanie Stearns is here. Welcome. Stephanie Stanley says, "This is real life, walking down 5th Avenue at 10 p.m. Indeed it is. Ooh, Arsenal fan 13. I apologize. Let me go back up. I have to pay attention to the chat a little bit more. Hey, Arsenal fan 13, thank you so much for your $10 donation. This is Tom. I think it's a lot more small mom and pop and indie retailers could be able to finally take over some of these vacant retail spaces in a lot of these distressed buildings. I could be wrong though. Maybe, I think in a lot of the retail space, you could be correct. Thank you so much for your donation. I appreciate you supporting the stream. I think you're right. It could be. Now, speaking of that, I do have one more critique in New York City, right? I give you the good, I give you the bad, and I give you the ugly. Here's another thing I'm not too thrilled about in New York. And I don't want this to come off the wrong way. So first, I will start off by saying this, just so you know my position. I am pro legalizing marijuana. I take that position. I am pro legalization for marijuana. I am not pro legalizing marijuana and then having a free-for-all land grab and everything's disorganized and it looks like, you're in the slums. And unfortunately, the way that New York State went about things is exactly what's going on. You have all of these, knockoff smoke shops on every single street corner in New York, and there's just so many of them, and they're not run properly. There's a lot of crime there. Very seldomly are they regulated properly, and it just looks so bad. So I think New York State did the right thing, but they managed it. I mean, they couldn't have had worse management with all these smoke shops. It's so bad. It's so horrible. Yeah, Rockstar, exactly. Managed properly and run well, it's fine. But it's like a free-for-all in the city right now, and yeah, DC 322, it really is. I'll pull off to the side here because this is a really good Korean restaurant here. Wardrip. I don't know how to pronounce it, but it's really good. They make like prepared food. So if you're working in the neighborhood or you don't want to cook, they have prepared food already, and they put them out on all these shelves here, and you just grab and go what you want. It's really good. Now, another problem in the city are all of these guys here. There's so many mopeds and garbage in the city, and very seldom do any of these mopeds have any license plates. So everybody's just ripping around the city and, you know, cruising around on these illegal mopeds that aren't registered, and that's another big mess that's going on. You really won't see it here too much, but as you get towards Midtown Manhattan, technically near like 42nd Street, it's just moped after moped after moped after moped, constant. That's a disaster. Okay, we are walking down 32nd Street. We are headed back towards Penn Station, and we're about to come up on one of my favorite grocery stores here. Excuse me, H Mart. Great place. All right, here it is. Love this supermarket. There's an Asian supermarket, Korean supermarket. There's also one down near NYU. But really, really great stuff here in H Mart. I'm tempted to go in there and get something, but maybe after the stream, who knows? Hey, Brand says, we were in New York City last year and the pot smell and smoke in Times Square was so bad, we left the area, it was awful. Yeah, and that's sort of what I'm talking about, right? It's, and I'm sure you saw a lot of those corny like smoke shops where there's all like these, you know, cartoon marijuana leaves in the windows, and it just is not a good look. It's, yeah, the city botched that one. The city really, really botched that bad, but. Now, speaking of SPACs, we are going to come up on one of Richard Branson's properties here. It's the New Virgin Hotel. But I always love checking out this view of the Empire State Building at the very, very start of Koreatown. Look at that. It's an amazing shot of the Empire State Building. Hey, NBA Elias, is Tom, I dare the Fed to lower rates by 1/4 percentage point on increasing price of energy and oil. Yeah, I think that would actually do the opposite effect. So I guess we'll talk about that since we're all, whoa, we've already been streaming for an hour and a half, kind of crazy. So obviously everybody, tomorrow is Fed Day, right? Tomorrow is the conclusion of the FOMC meeting. Here's another one of these mopeds. And you'll notice all the mopeds don't have any license plates on them. Now, I own a scooter and I own a moped in Miami, and they don't even let you walk out of the shop unless you register it. It was weird. You would think you could just buy one, right? But when I bought mine in Miami, they made me go through like the registration process, and they said, okay, the plate's gonna be in the mail in about 2 weeks. I was like, can I just buy it and do that later? They're like, no, we don't, in this shop, we don't allow it, which is weird, because technically you're allowed to buy whatever you want without registering it right on the spot, but maybe that's one of the reasons, who knows? But anyway, so tomorrow is the conclusion of the FOMC meeting, the Federal Open Market Committee meeting, and we are going to be hearing from our good friend, Federal Reserve Chairman Jerome Powell. It'll probably be live streamed, his speech, but as of right now, it's pretty much consensus that we're not going to get a rate hike. There will probably be a pause tomorrow. Then on Thursday, we are going to hear from the Swiss National Bank, and then Friday, we are going to round out the week of monetary policy with the Bank of Japan or the BOJ. Now, what are we thinking for tomorrow, everybody? Do we think there's going to be a surprise rate hike? Do you think Fed Chair Jerome Powell is going to come off pretty hawkish? What are we thinking? I'm kind of curious and see if we're all on the same page here. What do you think? Rockstar says SPX straddle is pricing in a 1% move. It'll probably be a non-event like the last FOMC. Well, one of my good buddies, he's retired now, but he was a really successful trader at Goldman Sachs, and he would say one of the things that was very well said on the trading desk. He said the first move is always the wrong move. That's what he would say. Jay Frost says you think there's going to be a hike. MBA Elias says no change. Vlad says a hawkish pause. Joel PM says pause for longer. Whoa, somebody says we're going up 1 point tomorrow. Wow. Okay, who knows? I mean, look, in this environment, anything's possible. Joseph Hardaway says the dovish days will be around the corner again. Keith says go figure New York versus Florida law. Wendy England says we'll follow Canada, no change. Arsenal fan 13 says probably a pause. All right, fair. Fair. You know, actually, let's go downtown a little bit because I want to see the World Trade Center tonight. And once we get down to like 23rd Street, you'll be able to see a pretty unobstructed view. This truck has been in this same spot since 2021. This is where we started the live stream on New Year's Eve in 2021, right at that truck. It's been in the same spot. I don't even know how that's possible. I don't even know how that's even possible. Hey, Jamo Loves says, where are the flying? All right, we're gonna get you out of here. All right, West 31st Street. We're headed downtown. In the distance, you can see the spire of the World Trade Center. Looks great. Key says we probably need a 25 basis point rate hike. I think we'll get one more before the end of the year. Not this one, but the next one. Mark says, hey, everybody from Chicago. What's up, Mark? Hey, Marcelo Gill says, hey, Tom, nice night for a live. Marcelo, what's up? Didn't you say you're coming to New York pretty soon? How's everything over at UBS, Marcelo? Hey, Lisa says, Tom, do you see any effect on the economy, etc., coming with student loan interest and repayment? That is a good question. So let's touch on that actually a little bit. So is it correct that the forbearance, I guess it's called, of student loans is going to be lifted October 1? So starting October 1st, student loan payments will now be in effect yet again. I would say, yeah, I think that's going to take a little bit of a toll on the economy. Because, I mean, think about who has student loans. Right? It's a lot of millennials, Gen Z, and if those payments have to be made yet again, and the interest is going to be accruing, that's going to be a very, very big psychological hit, and I think that could put a dent in consumer spending, in my view. Now, is it possible there could be like a last-ditch effort from the Biden administration? And this is just a question, I don't know. Is it possible that there could be a last-ditch effort, right, going into an election year, 2024, to extend this student loan forbearance? I don't know. I'm very fortunate, and this is something I'm actually very thankful for, is I don't have student loans. And we've sort of talked about this before, but when you're 17 years old, I mean, at least I wasn't. I'll speak for myself. Nobody at the high school I went to talked about, the ramifications and the repercussions of student loans, or, how to read an amortization table, or how much interest is really going to rack up on these things. The only conversation was, apply to a college that you like. Don't worry about the cost because you could just take out a student loan, because everybody takes out student loans. And when you're 17 and you're stupid and you're excited about going to college because you're going to party and have fun, you don't think about graduation day when reality sets in, you have to get a job, and then you're like, oh my God, wow, I have a $50,000 student loan balance and the interest is racking up every single passing day, and I'm not even paying off any of the principal yet. So that's a big issue, and I think that more people, and I'm not telling people what to do or not, but with this forbearance, I guess the interest wasn't accruing. If I had student loans and the interest was no longer accruing, I would throw every dime that I had to my name at those loans, because everything is going to hit the principal, right? And you're going to save yourself years and years and years of turmoil. So the switch is going to get flipped on and reality is going to set in for a lot of people. Could that potentially have an impact on consumer spending going into the holidays here? Quite possibly, yeah. Now, how big of an impact will that make? I don't know. But what do you guys think? Any thoughts? Agreements, disagreements? Royce is right on, Tom. A student loan is a predatory loan. Now, I wouldn't say all of them. Some of them are, right? But I think it comes down to the education of it. I think there should be more guidance to say, look, if you want to go to this private school and study, and get a major where you're probably not going to come out with a very high-paying job, do you realize this is going to be all of the interest and all the principal you're going to have to pay? And that should be explained very, very clearly. I also think access to capital, if I was president or something, I'd probably make this change. I think access to capital for a student loan should be based upon your prospective salary that you're going to get in the major that you choose when you graduate, right? Because if I'm a bank, and this is the reason why the student loan problem is so bad in America, is because everybody is always going to get the loan. That's why the banks don't care. That's why they just lend the money out, because the government guarantees all the loans. That's why they don't care about what major you have. But if the government didn't guarantee all these loans, well, a lot of banks would be like, oof, I don't want to lend this person, $100,000 if they're majoring in, something that's not going to be lucrative, right? But if you're going for computer science or nursing or whatever, right? Well, then yeah, I'll lend you the money because you're probably going to get a really good job once you graduate. So I think, number one, you got to get the government out of the student loan business. You cannot have the government guarantee these student loans, because that flips the incentives on its head, right? In theory, colleges are no longer incentivized to compete for price. If anything, they're incentivized to build these extravagant campuses and attract as many students as possible, because they know that the demand is infinite, because cost isn't a problem in theory, because you'll automatically be able to get the loan. But if not everybody was able to get the money, well, guess what? Colleges would have to get leaner, right? Colleges would have to think twice about building their 5th swimming pool. Again, easier said than done. But I think that should be a requirement. You can borrow money in proportion to the amount of money you're probably going to make upon graduation, because that's putting people in a really, really bad spot down the line. And I have friends who are in that spot, and it's really a nightmare. Some of these balances I've seen are wild. Someone says, I'm 19 and I was just talking about a student loan today. Glad to be hearing about this. It's so interesting. Yeah, so I'll tell you this. I can't give out any financial advice, but I'll give you some perspective. I went to a local college here in New York City. I studied criminal justice and economics. I have a really good friend. He's a really good buddy of mine. He studied the same exact thing, economics and criminal justice at Pace University, 50 blocks south of me. His student loan balance is like $112,000. And he's making the payments on time, but it's not even making a dent in the loan balance because the interest is so high and it just keeps racking up and racking up and racking up. If anything, his balance on his loan has grown and he's been making all his payments on time. So we have the same degree, we have the same education, just from different schools, and he's stuck with over $110,000 worth of debt. So it is so important, right? Because as you get older, particularly in your later 20s, the number one cause of stress in your life is going to be financial stress. And when you're 19 and you're partying and you're, hitting the bong in your dorm room, you don't really think about financial stress. You're thinking about getting high with your friends and hanging out, but when you graduate and you're getting your job and now you're 29 years old and you're like, I'm so exhausted from working this job, but I have to continue to do it because this loan balance is $110,000. Oh my God. And the anxiety you get is so crippling. And I'm not trying to over embellish this. I just think it's so important for young people to hear this. I think you should still go to college. I think it's one of the best investments you could ever make. It's proven. It's statistically proven that going to college and getting a 4-year degree, you're going to make way more money than a person who doesn't have a college degree. So the investment is worth it, 100,000%. What's not worth it is going into so much debt to do it. So if you have to go to a local school, if you have to go in-state, get the education, get the piece of paper, learn a skill that's going to be marketable in the marketplace, and you're going to live a very nice life. Hey, Andrew Nielsen, thank you so much for the $10 CAD donation. Says they make the US dollar stronger. That's what Powell's job. The same thing with Christine Lagarde. Yeah. Now, depending on who you ask, depending on which president you ask, you would actually want a weaker dollar, right? One of the main issues that a lot of corporations have been having over the last year is the dollar, or the Dixie's been really, really strong, and that's been impacting corporate earnings. But if you've noticed, over the last 3 months, the dollar's actually been coming down a bit, right? So if you look at the Dixie, right, ticker symbol DXY, the dollar is actually losing some strength, which is very good for corporate earnings. Because you have to think about it like this. This is another reason why, even if you're not interested in the financial markets or the stock market, if you're interested in a company like Apple, right? Let's say if you love Apple products, you should still listen in on the earnings call because you'll learn a lot about the business. And one of the things that Tim Cook would come on the call and say constantly is that there was a huge impact to earnings and even revenue because the dollar was so strong. Now, why might that be, right? Well, Apple sells a lot of products and services all over the world in foreign currency, but they're an American company and they report in US dollars. So when they go to convert that foreign currency to US dollars, if the dollar is very, very strong, well, that foreign currency can now buy a lot less dollars. So that is a huge impact to earnings and even revenue. So with the dollar coming down a bit, that's probably actually a good thing for a lot of these corporations. But Andrew, thank you so much. You're very, very kind. I love this building. This is actually a Home Depot. Look at the amazing design on the facade. It's this really bright white facade. It looks great. We're pretty close to the Flatiron building too. Hey, LB, what's up? Says my grandmother always said to me, get a good education. She's smart. Jetstar says, are you saying everyone should go to college? No, not everybody. I just think it's common sense, guys, right? It's common sense.
It's common sense. Just look at all the data. I mean, audit corporate America, okay? Audit all of the CEOs of corporate America. Chances are they have an MBA from some big business school and they have all the pedigree, right? Those are the people that are making the big bucks, right, at major companies. Now, yeah, you don't have to go to college. It doesn't necessarily mean you're going to be successful. It's the skills that you possess. The point is to learn fundamental skills. And if that means you want to be an electrician, right? Let's say if you want to be an operating engineer, yeah, then go learn a trade that's high valued, right? Electricians, plumbers, HVAC, those are all very high value skills, especially now. There's actually a shortage of those workers. So it's important, yeah. It just use basic common sense. You know, if you're going to take out $250,000 to go study art, probably not the best idea. Like, you know, just be honest with yourself. You could do that in your spare time, but, you know, you got to think about the future. But all of the data points to the fact that if you have a 4-year degree, you will make more money than people who don't. It's just some college, right? But the point is just go for as cheap as possible. In New York State, right, we have SUNY or we have CUNY. You can go to college for like $2,500 a semester. I mean, you can just get a little job and work your way through college, get the degree, and do whatever you want. It's just important to just be just have very basic common sense and focus all of your energy on building skills, okay? Don't so much focus on the degree, focus on the skills. What skills can I acquire that will make myself more marketable in the workforce, right? Maybe I learn another language, okay? Maybe I speak Italian, or maybe I speak French. Maybe I learn another programming language, right? Maybe I learn Java, C++, C#, Python, right? The more skills that you can acquire, generally speaking, the more money you're going to make. All right, let's try to cross here. We are now outside of the Flatiron building. Hey, Christian T says, agree. I went to a smaller, cheaper in-skate school, got my degree, and then learned my skills and moved where I wanted to go afterwards. Yeah, I mean, that's really all you got. I did the same thing. I mean, I'm not like some savant. You know, I didn't take all these like super hard classes. You know, I chose to go into sales, and if you want to be in sales in New York City, well, you got to have a big network. You got to build the network early on and often, and that's what you got to do. So whatever you want, if you want to be a software engineer, then I would spend all of my time, you know, writing programs and showing that. But if you don't want to do the college route, you just have to work harder and you have to be more creative and you have to show your results. So if I didn't have a college degree, right, for somebody who's watching who doesn't have a college degree, it doesn't matter. You could still get very lucrative jobs in tech and anything else. You just have to have a verifiable track record to present to a company to say, hey, I built this game, right? You know, I spent all my entire summer building this game and it's a functional game and I now have 10 users and those 10 users are paying me $2 a month. That may not sound significant, but to a company, they're gonna be like, whoa, this person actually took the initiative and built something of substance, and it was creative and had a go-getter attitude and did something. It's kind of the same in the investment business, right? If you saved up, let's say $25,000 at a summer job, this is a pretty good shot of the Empire State Building here. You know, if you saved up like $20,000 working summer jobs all throughout, you know, high school and college, and you can't get a job working on Wall Street or at a hedge fund, nobody would give you a shot. So take the go-getter attitude and manage that little amount of money you have, but detail and write out and audit your systematic process for running that money over the next 2 years. Make a little pitch deck, make a presentation, make a portfolio, and shop it around the street and say, hey, I put my own capital to work, this was my investment strategy, and this is how I would replicate that strategy with the higher AUM. That's really what people are looking for, is self-starter mentality, to have the go-getter aggressive attitude, to do things yourself, okay? You don't have to be spoon-fed everything all the time. Get up, do something yourself, commit the capital to it, even if you don't make any money, right? In the presentation, you could say, I ran $25,000, I lost half of it, but this is what I learned from it. I did a couple miscalculations on the discounted cash flow model here. The business had some management changes and the stock went down. I didn't cut my losses soon enough. Next time I know to do that, right? You'll get a job. I'm telling you, you will. So you just got to be creative. You got to have high creativity, high motivation, high optimism, and extreme, like ridiculous perseverance, like a sickening perseverance. And you'll be fine. You'll be good. Now this place on the corner, I actually went here for the first time. This is like a matcha place. It was actually pretty good. Anybody here a big fan of matcha? It's like tea. It's pretty good. Willy Wonka says, in your opinion, what's the best majors to get into a hedge fund as a trader or a quant? If you want to be a quant, you have to have very, very good CS skills. So I would say computer science, physics, you got to have like really, really good critical thinking skills, statistics. They also like data science as well. So if you want to study data science, but look, if you want to get a job at like a Citadel or a 2 Sigma or a jump trading, you got to have really, really hard skills. And they hire a lot of CS majors, they hire a lot of physics majors, data scientists. So I would go really, really hard and heavy on the like coding questions as well. I would do a lot of leak code stuff. If you want to be a quantitative, that is like very, very CS intensive. I would say is probably the best route. Hey, Cooking says, I just went to a recruiting event for Citadel. Nice. How did you like it? What is going to be the outcome of that? What do you think? I think you'll get the job. I think you'll get it. Yeah, quantitatives are the highest paid, generally speaking, on Wall Street. And the interview process is very competitive, but there's actually, you know what? Go to Jane Street's YouTube channel. Jane Street actually has a really good YouTube channel where they recorded some of their interviews. So they actually give you what the actual interview is, and you could do the same like coding questions, and it's actually really good. So I would go to that. Go to Jane Street's YouTube channel and you could practice all of the questions. There's so many good resources. I mean, and I would just do that. Right? If that's what you want to do, that's not what I would want to do. Just because I'm a sales guy. I like talking to people. I don't like doing that type of stuff, but if you do, that's what I would do. Just drill those questions over and over and over again. Maybe even code your own trading bot and say, hey, I made this bot and it was successful, or maybe it wasn't successful. And then you could say, well, I coded the bot, it wasn't successful, it lost a lot of money, but here's what I learned from it, right? And here's what I would have done differently. And you will be so far ahead of the competition if you do that. Okay, we're coming up on Union Square. Willy Wonka says, yeah, I've done that. It's a lot of random probability and confusing logic questions. It really is. I'm sure you've heard of the dice question. Like, if you roll a die this amount of times and you win $10, how many times should you continue to roll and play? It's like a lot of those, like, because they want to know how you would think, right? Because if you think about it, if you're managing money and you work at a hedge fund, your goal is to make more money with the money you have, right? So they don't want you making stupid decisions to lose the firm money. That's pretty much the goal of it. If you get down to the extreme basics, they are looking to hire somebody that is going to make good decisions under pressure when they're managing large sums of money, right? So they give you a lot of probability questions, statistics questions, and scenarios, like a lot of scenarios. All right, everybody, but we do have to call it a night as we come up to East 18th Street. So if you enjoyed the live stream tonight, which I did, feel free to leave a like on the video and hit the subscribe button if you're new. We do these streams almost every day, starting at 8:30, and we would love for you to join us. We will be live tomorrow starting at 8:30, so please subscribe and join us tomorrow. Guys, it is Fed Day tomorrow. We are going to hear from Fed Chairman Jerome Powell. It's going to be exciting, and we will cover it step by step, play by play, live, right here on Walks on Wall Street. All right, cool. And if you want to check out that Bill Ackman interview, just type !Bill. I think you should probably read that or listen to that before going to bed tonight. So UniJ23, thank you so much. Jay Frost, AUS Fly Girl. SC, thank you. Prime, Joseph Hardaway, CD, JC, Wendy England, Brad's Brain, Hawaii, Primate, thank you. Larry, ATC, A-Scan, LB, all of our friends in the chat. Everybody, have a fantastic night, and we will see you back here tomorrow on Walks and Wall Street. Thanks, guys. Ken Brockton, Western Mass, Dave, Julie, NBA Elias, Arsenal Fan 13. Thanks, everybody.